Hi, Elizabeth. Since you're not able to attend the meeting, I suppose it's now 7:12. I guess you won't be able to make it to the meeting, so I'm just going to record a session of the presentation for the Smith Maneuver for you. Um, and then, if you're interested in learning more, or if you would like to apply your mortgage details with your personal economics scenarios into the calculations, then we can book another meeting so we can plug in your numbers to see what the potential savings are there for you. So basically, the Smith maneuver is a strategy to convert your mortgage into a tax-efficient wealth building tool. And essentially, it is transferring your otherwise non-income tax deductible mortgage into a tax deductible investment loan. Okay. So what is it? So it's a strategy designed for homeowners in Canada. It converts your non-tax deductible mortgage into tax deductible investment debt, and it helps you build wealth while reducing your net interest costs. So who is this for? Obviously, you have to be a homeowner with a mortgage. You need to have stable income and you need to have good credit. You're willing to invest for the long term. So this is definitely not something that you can sort of make a big profit in the short term. It's nothing like that. It's really a long game. And you're comfortable with leveraging equity to invest, which we'll dive in a little bit into more detail later on. Now, how this works with the flow. So basically, you can see from the graphics here. Let's say your home has a 200,000 appraised value, and will have access to 75 to 80% of lending value. So up to 75 or 80% of the value we can have access to. And then, so what you do is you make a regular mortgage payment. And then when you do make a payment, your principal gets paid down. And then that principal becomes the available credit in the readvanceable mortgage. So that would be the HELOC. So the HELOC is set as a readvanceable HELOC so that as you pay down the principal, the borrowing limit automatically increases by that amount. And then this you will be able to borrow from the increased limit. So borrow from that line of credit, and then you can use that money to invest in income generating assets such as stocks. And then your investment loan interest is now tax deductible. So that means the portion that you just took out from the line of credit is now a tax deductible interest because you do pay interest on the HELOC, and then that is tax deductible. And then you're able to get a tax refund at the end of the year, which you can use to pay down your mortgage faster. Or you could use it to reinvest. It's up to you. So that's basically the flow for the basic Smith maneuver strategy. And let's take a look at the example scenario I've generated. So let's say you have a 675 mortgage balance. Monthly payment is this, and then we will have a readvanceable HELOC limit of $760,000. Your annual tax deduction is, based on your investment interest. And then based on the size of the investment you have, you can claim from 25,000 to $30,000, and then the growth in investment and the tax refunds help to build your overall net worth. So in this example, we're able to generate tax refund of 368,000 over the amortization of 25 years. This is assuming you're taxed at a marginal tax rate of 53.5%. That's like, some of the highest bracket income tax out there. So obviously, the higher income bracket you're in, the more advantageous it is for you to implement the Smith maneuver. So if you're only like in like the lowest income bracket, you could still benefit from this strategy, but the effect will be a little bit less. But then to find out how exactly your potential is, we do need to plug in your actual numbers. For this scenario, I was able to save the client 9.92 years off of their amortization. So they're able to pay off the mortgage in 15 years as opposed to the original 25 years. So the benefits for the Smith maneuver is to pay off the mortgage faster, obviously, and at the same time increase your investment portfolio. And this is done without having to spend extra cash out of pocket. There are the tax deductions benefits from the investment interest, and you're able to build wealth without having to spend extra in monthly costs. There are obviously some risks and considerations. So, any investments are prone to risk. Stock markets can fluctuate. So there's definitely going to be like if you're looking at short terms, there's going to be ups and downs. But over the long term, like if we're playing the long game, the and we look at the graph for past stock performances, like an index fund or something like that, it's safe to say that in the long term, stock markets will increase over time at a pretty good rate of return, anywhere from 6 to 8% is reasonable. Um, and it does require discipline to reinvest your tax refunds, right? So once you get that, lump sum payment from CRA when you get your tax refund, you should have the discipline to either use it as towards the prepayment privilege for your home's mortgage, or to reinvest those money into your investment to build your overall net worth. This is again, it's a long-term strategy. It's not anything, nothing. It's not for a short-term plan. And it has to be done correctly to comply with CRA regulations. So it is important to work with a certified professional like myself. Again, I have access to reinvestable mortgage products, and I will be able to provide guidance setting up your Smith maneuver setup properly. I have access to professionals like financial advisors, certified accountants. I will be able to provide personalized strategy to meet your financial goals. Yeah, so that's pretty much what the Smith maneuver is in a nutshell. Uh, so yeah, let me know if you're interested in finding out more, and then we can set up a time where I can input your income and your mortgage details. But let's say if you're just wanting to, hey, you have the renewal coming up, you just wanted to take whatever is going to give you the lowest rate and the lowest monthly payment. I have access to Canada's lowest rates as well. So if you're interested in just getting the lowest rate, we can definitely set you up for that as well. Anyways, hope to talk to you soon, and hope I can help you save some money.